I'll let you guys introduce yourself. Ladies always go first. Hello, everyone. Welcome to Leadership and Readership Hour. I'm your host, Nikki Marie. I am a little cloggy today, but thank you guys for tuning in. I have two panel speakers, and we're going to talk about surface information on debt management. So I'm going to let the young lady go first and introduce herself, like what your name is, what bank do you work for, what type of information you might provide for us today.
Awesome. So, good afternoon, everyone. My full name is Stephanie Reyes. I currently work for Citibank. And today we're going to be talking a little bit about debt management and how the bank makes money. All banks, a little bit about budgeting, and a little bit about credit as well.
Awesome. And we have another returning guest.
Yes. My name is Justin Pierre. I'm with the Campaign for Financial Literacy, and fortunately for me, I've been on the show now 3 times.
Oh my God, you're like a returning addict. So I was looking at a post that talked about the things that you don't learn in school, and it's usually centered around financial literacy. No one talks about compound interest or just student loans. No one gives you that real talk information. So I'm glad to have you both on just to ask some general questions because there's so much about financial literacy to learn that it takes a long process to get the information. But one of the questions that I had was, what's the best practice when it comes to budgeting? I know some people use, well, myself, I use Excel sheets. So like I'll go to my Google Sheets and just kind of budget everything and plan it out and see what areas I'm spending most of my money and try to figure out how I can save. But what type of practice would you say?
You want to go first?
Sure. So, I'm glad you said Excel spreadsheets because I do the same. I'm very, very detailed. So, I guess it depends on the person. But I like to even write down where does the money go, how much is coming in. I also track how good was it last month and compared to this month. Did I spend more than last month? So it just gives me a clear picture, I guess, per quarter, because I have like a business mindset already. So it's a better picture for me each quarter. Okay, this quarter I did better than this quarter. And it also for the full year, you could even see like, okay, I spend more during the summertime rather than the winter time. So that would give me a clearer picture as to how it does like my mind work when it comes to money. But I'm very specific, and I do use Excel spreadsheets a lot.
Yeah.
For myself, luckily I have Miss Reyes on my side. This is my other half, and she's actually one who introduced me to using Excel spreadsheets. You know, for the most part, I was just the type of person to, mentally clock these things or write them on a piece of paper,
Right.
and then you lose the notebook. Or
Yeah, I was going to say, how often do you write things down
Right.
and then lose it?
So, it happens a lot.
Yeah.
It happens a lot of the times. You're just trying to memorize things, or I spent $200 here and there, and then it's like you lose track. You're not on top of it, where, you could go straight to your computer. You could put those things down, and you could see exactly where your money is going. And then it's more of an eye-opener for yourself where, you might have missed something that you spent money on prior. And then it's like, where did those $300 go? What did I spend on this? And then you're trying to go back into your transactions and figure everything out. And it's like, did I send somebody money? And it's like, it gets crazy.
Would it be too obsessive if we like hold on to every receipt? Like if you went to the Dollar Tree and you spent like $2 on a notebook.
No.
Would it be crazy to
No
save
way.
that and put it under miscellaneous or something?
No, that's good.
Right. You should put under miscellaneous. Yeah, because the wealthy people, they track every single dollar that's coming in and every dollar that's coming out. So even though it's $2, but you're aware of where you're spending those $2. It's just about the awareness.
I thought maybe that was a little crazy.
No. And then now you're in a situation where I know a lot more people are wanting to becoming independent and become their own business owners. So these are the responsibilities that you have to be on top of. It sounds crazy, but $2 could be the difference between the tax bracket that you're playing in now and how much money you could be receiving. when it comes to when you're filing your taxes and things like that, what kind of tax breaks and tax laws are provided to you based on
Right.
the money that you're providing yourself and the things that you're noting down.
Well, I'm on the topic of school. And before this, we were talking about how hospitals and schools and banks are all related to business. You open up a bank account, but how do you trust that your money is safe there at a bank?
Well, ideally, your money is safe in the bank. I'm sure if you walk inside of a bank, you see a lot of signs, especially by the teller areas. You see a sign that says FDIC, which means Federal Deposit Insurance Corporation. So they basically cover up to $250,000. So if you have less than that, your money is safe. In other words, if something ever happens, the bank is obligated to give you that money, whatever you have. But for the people that have over $250,000, that's a separate conversation, right? But I mean, to this day, a lot of people, especially the elderly people, they have tons of money just sitting in the bank because they believe that that's the safest place to have it.
Yeah, my dad does not. He never believed in having a bank account. He's like, nope, my money's not safe there. He doesn't even have a cell phone. He's like, cell phones create radiation, and just he's very anti everything. But if you have a savings account, how do you, I guess, make yourself not touch it? How you're looking at it and you're like, ooh, I'm putting money in, but then something happens and you're like, ooh, I want to go party.
Right.
It could be something that's not even like really that important, but you're like, oh, I need those new shoes that just came out. Let me go and dip into my savings. How do you control yourself?
I would say make it hard for yourself. Like bank somewhere where you don't have to bank around where you live. That's something that I did about 2 years ago. I banked in a bank in like Pennsylvania, Connecticut, and I never go over there. So it made it difficult for me to take money out, right? I didn't even have a card from the bank. I didn't have anything. I just had online access to the bank. So I was able to get online, see my balance, transfer, and put money in, right? But it was for me to transfer money out, I would have to wait like 7 days. After that is like, okay, I don't want the money anymore,
Right.
For myself, I would say create a goal for why you're saving and then make that goal a really tough goal, something that you have to be disciplined with in order to reach it. Some people, for myself, when I was first starting out making money, I was hearing people say save, save, save. So I was saving. And then I would just get to a point where it's like, all right, I felt like I saved enough. Now I'm going to go spend it all. And I will blow the whole savings, and then I'll have to start all over.
Right.
Up until I got a little bit older, and I was like, you know what? I have to practice better saving habits,
Right.
and now start setting goals when it comes to saving. And then anytime I got closer to that goal, set a higher goal, right? This time I want a car. Even though I know I wasn't going to get a car, I was like, let me save up to say, hey, if I want to get a car, I could get a car. Put myself in a position where I'm saving $10,000. Right. I want to go on this expensive trip and then save money. That way I could, I'm tricking my mind that I'm saving to go on these trips, but I know I'm really not going on these trips. But it's just giving myself a destination so I could accumulate the money.
Right. What would be the first thing when you're looking at debt? Like, what's the first thing that you should be doing when you're looking at your debt that has accumulated so far? Like, let's say I'm 21 and I got my first credit card when I was 18. And I have like $5,000 in debt on that credit card. What should be my first step of planning to pay that card down?
Cutting down your expenses, because a lot of people don't realize where the money is going. So if you cut down your current expenses, that money could go towards that credit card. And also in specific to the credit card, I mean, it's a lot of things come into play when it comes to credit cards. Like, is it charging you APR, right, which is the annual percentage rate? How much is it charging you? All of that comes into play. Each card is different. So if it's something that's charging you maybe like 20 cents, it's something that you might prioritize, but it may not be your number one priority. But there are some cards that are charging you like 25%. So every month they're charging you like $60, $120, which could double up really, really fast for you. So it really depends on the card. But I would say in that scenario for 21-year-olds with one card that's $5,000, I would definitely say cutting down your expenses and start tracking and creating that budget sheet to see where your money's going, so you can allocate the proper funds and go into the credit card.
For the APR, that's based off of your credit score?
No.
No.
No, that's based on the credit card. and also
The
your
actual
balance.
credit card.
Right. So the higher the balance, the higher the APR is going to be. So if you owe, let's say if you owe $10,000, your APR may be like 25%, right? So they may be charging you like, I don't know, just a random guess, maybe like $100, 150, right? But if that card, let's say your balance lowers down to, let's say, $1,000, the APR is going to be a little bit lower because of the balance.
But you could always talk to the company and say, could I get a lower APR?
I mean, I never
Now?
tried that before. I never tried it before, to be honest. But what I would recommend is to stay away. I wouldn't say stay away, but be a little bit more disciplined when it comes to store credit cards, because
Ooh,
those are the
yes.
highest interest rates. So you want to be more. I know credit is important. It's something everybody needs. So I would say stick to the credit cards that comes to like the banks, like Bank of America, Chase, Citibank, all the banks, credit cards. Those are the most safest ones, I would say, even though the interest is a bit high, but it's nothing compared to the store credit cards.
Wow,
Yeah.
that's crazy. So I had a question about debt as you age, right? So we're like, okay, so if we're 21, 23, whatever, the older you get, is it true that your debt will eventually fall off or fade away and you don't have to pay it back?
No, that's not true.
You're like, no,
Well,
negative.
I wouldn't say it fades away, but there are ways, there are programs out there, depending on what kind of debt you have, that could eliminate that debt for you. Like I have my own family members that their debt just, I guess, fade away, as you say, right? But it depends the kind of debt, because, for example, student loans, there is a forgiveness program, right? For credit cards, to be honest with you, it depends. I've seen people that their credit cards just like kind of disappear from their credit report. I don't know why that happens, but I have seen some credit cards that stay there and they even go through collections. Now you got to go to court. So it gets really crazy.
Oh my gosh. I know I was looking at something online that was talking about bankruptcy, because a lot of people feel like, oh, I'm just going to file for bankruptcy and then that's it. I won't have to pay anything. And they had it on there that alimony, child support, and student loans cannot be forgiven or eliminated once you file for bankruptcy. So nice try, guys.
Yeah, that's a tough one. And me personally, I always tell people, really think about it before you file bankruptcy, because then after that point, you can't have anything under your name for a specified time. That's a long time. That's a long time for you not to. And I'm pretty sure in those 7 years, you could take care of what you need to take care of, rather than, just calling, throwing your hand in and say, I'm going to file bankruptcy and try to start fresh and then be locked for 7 years. That's a very long time.
I find like a lot of young people that do that, they end up hurting themselves. But older people, like my aunt filed for, I think it was chapter 11 or one of the chapters, and she's great right now. Her credit score is like through the roof. It's over 800, and she's able to get things. But that 7-year stretch, that was really long.
I was gonna say that it depends on the age.
Yeah.
It depends on the age.
Yeah.
If you're like 21, 7 years, even if you're 30, that's basically your prime time. Like that's maybe around the time you have your kids already. You buy a house. I don't think that's a good idea.
But could you imagine being 21 and filing for bankruptcy?
Yeah, I would love to know what you did to position yourself there.
So I was reading online about the 50-30-20 system. I don't know if you guys know this.
No, never heard.
Okay, so the 50-30-20 budget, you spend 50% on necessities, no more than 30% on your wants, and at least 20% goes towards savings or paying back your debt.
Okay.
Yeah.
So as far as a lot of what we teach, when it comes to people first starting off, anywhere from 5 to 10%. But if somebody's a little bit more, disciplined in those habits, anywhere from 15 to 20%, and the more the merrier. Grant Cardone, a billionaire real estate guy out there, he tells you all the time he saves 50% of any commission that he makes. and he knows that anywhere from 20 to 30% is going to taxes, but he just wants to make sure that he has extra in there just in case the IRS comes crashing down. He says the more money you make doesn't mean it comes any easier. The more money they will take. So just to make sure that, you just making sure that you're building those habits, and you can start creating those things along the way. Because the more, we don't all plan to be making the same amount of money for the rest of our lives. We all want to make more money.
Right.
So you can't position yourself to say, you know what, I'm only saving $100 now, and then in the next 5 years, you're still saving $100.
Yeah.
You're not really doing yourself any service. So
True. Some people don't really know how to, I guess, save the money that they're making, because it all takes, discipline, and then trying to figure out where to put the money.
right.
So is that something that you guys discuss with the financial literacy campaign?
Yes, definitely. And it also depends on, that person's specific needs, right? I think that's something that's very crucial. Everybody's financial needs is extremely different.
Right.
But when it comes to somebody, as far as, the amount of money they make and how they want to save, it's very critical for them to talk to their bank, right? I know for myself, when I was first starting out, I would tell my bank, listen, I want to make sure that if I was making 500, I want to make sure 25% is going into my savings, but I also want to make sure that, I can only go into that account once a month if necessary, right? Make sure that if I transfer money, right, I can only transfer money once a month, right? Just designing your account in manners where even though you might not be disciplined, there's a reaction to what you're gonna do, something that's gonna stop you, and that you can't make those what's the word I'm looking for? Those microwave habits. People want the quick gratification. You only have $50 in your account, and you see a pair of sneakers, and you're like, oh, I'm gonna send myself 25 to get the pair of sneakers real quick, and you just send yourself the money, but that you can't do that because your bank won't allow it. So just start building those type of restrictions on yourself.
So it is possible to have those type of restrictions with the bank.
Yes. You
Okay.
could do it through the online banking. There's under your alerts, you could literally put whenever there's a withdrawal, you get a notification, or even restrict yourself from taking money out. So you could definitely do that through the bank. Yeah.
I think there was some questions that you had as well.
Yes, I'm sorry. 1 second.
Is there anything that you're reading or that you would recommend for other people to read just to get a little bit more understanding of debt management?
For beginners, I would recommend the book Rich Dad Poor Dad. It's not specifically for debt management, but it is a book that will give you a broader picture when it comes to your finances, when it comes to assets, liabilities, right? And I think once you understand that concept, the debt management will just fall into place. So I would definitely recommend that book. But my back knowledge from debt management just comes from banking. So I've been doing banking for the past 5 years. So it's already something that I've been prone to know. But I would definitely recommend that book by Robert Kiyosaki.
Are there things that you see in the banking world that would scare you or that would make someone maybe a little bit afraid to invest in a bank? Because that's basically what it is.
I would say yes.
Yeah.
I would say yes because there is risk. So in the banking industry, there's different titles and positions, right? So we do have financial advisors, right? And for those people that don't know, if there was a financial advisor, it's because you don't have a certain amount in your bank account, unfortunately, right? So unfortunately, that's how the banks work, right? But that's why we're doing this campaign, because we sit down with everybody. It doesn't matter how much you have, right? But financial advisors in the bank, they do help people when it comes to investments, and it can be risky, right? You could lose your money. You could gain money. So I think that's what I would say when it comes to if you should be a little bit afraid if you're sitting down with a financial advisor through the bank. Just be aware that you can lose money.
Yeah. It's like any bank.
Definitely.
Or any investment.
Right.
Everything is a risk.
So yeah, definitely. I would recommend Robert Kiyosaki as well. I believe just reading his book and just listening to him as a person, the one thing that he's an advocate of is just having people understand accounting, right? What is accounting? You don't necessarily need a degree to understand accounting or even practice it, for a lot of things. And reading his book on multiple times, you really understand, what accounting is. And I think a lot of people don't really know those things. But when you create a budget sheet for yourself, things like that, and you're calculating your expenses and you're micromanaging yourself, which is okay to do. I don't want people to feel like they're being frugal or cheap by micromanaging their money. Hey, it's your money, right? You want to make sure that you have extra when you need extra, rather than be sure to have to act for a handout. But just starting to understand, the importance of finances is very huge.
Yeah.
So I did have a couple questions for you, if you don't mind.
Yes, of course.
Right. I just think that we're in a realm when it comes to where we are in finances. A lot of people, they think they know what things are, and they really don't, and they're confused. Right. So can you just break down what is debt and what is credit?
So debt is basically when you owe money to a financial institution. So it could be either through a credit card, it could be a student loan. Any moment that you owe money to a financial institution, that's debt. Right? It could be $1,000, that's debt. But the definition of debt could be a little bit more drastic when it comes to, I'm in debt. I owe $50,000. But the moment you owe money, that's debt. Did I answer your question?
Yes. And what
And
is
then credit.
Credit. So credit is basically it's very simple. It's just a number that indicates how responsible you are when a financial institution lends you money. That's basically what it is. How responsible you are to pay that money back.
Okay.
So that number, it's like when you have a Social Security. Everybody has a Social Security, and that identifies us, right? So that number identifies us, but in a financial aspect. How responsible are we to pay whatever we owe to that financial institution?
Okay.
In a timely manner, things like that.
So what would you consider good debt, and what would you consider bad debt?
Well, good debt could be, let's say you take out a loan from a bank and you're going to invest in a real estate and you're going to make that profit back, right? To me, that's good debt. I believe that's good debt. When it comes to bad debt, is like if you're purchasing liabilities where you know that object is not going to give you money back, that's bad debt, because you're not really getting a profit to pay that money back. But if you're buying an asset with debt, that's definitely good debt.
So you say liability, like going to the bank, getting a loan, and go purchasing a car.
Right.
Okay.
That's bad debt.
Okay.
I would have said bad debt would be a student loan. And I only say that because my background is financial aid. So I talk to students all the time, and I'm thinking, how much of this loan are you able to pay back?
Right.
So there are students that I know who are in the 200,000 range for their student loans. And I'm like, how likely are you to pay this back? And they're like, it's a 2% chance that I'm going to pay this back.
And
So now it's like, okay, that's bad debt, because now it's on your credit.
Right.
And then it's going to come up that you're not paying back. Then it's going to go into default. Then you're going to get the taxes taken out. Like, it's just a drastic thing. And so some people would say, oh, yeah, that's good debt. It's only good if you're paying it back.
Right.
Right.
Correctly, I
Right?
would say. And that's the scary part of even about college, I would say. Fortunately for me, I didn't go to college. I went straight into a trade school, straight into construction 6 months after the trade school. So I went from graduating high school, a 3-month program, and then straight into the union making pretty good money. I think that's extremely scary, knowing that you graduate after 4 or 5 years, maybe 6 years, depending on your major,
Right.
with $200,000 in debt, and then now have to start your career path off where you're not even making close to that amount of money.
Right.
And then, life happens. You're working your job where you're probably making $30,000, $40,000 to start off if you're lucky. You meet that right person. You want to start a family, right? Children are involved. There's a house involved. All these expenses are involved. At some point you want to retire, but your student loan debt is probably is more than what your retirement is going to look like. And then on top of, you want to put your kids through school. I think those are very scary, numbers to look at.
Right.
For any individual who has that amount of money.
Yeah.
I would even, just to talk about that, listen, if you're going to go to school, be decisive on the major that you're going with.
Yes.
Don't switch around and bounce around.
Right.
And so the next question that I had to get back onto it was, when it comes to the credit situation, right, if I go into the bank, how does the bank make money if I own a credit card?
So the bank makes money in two major ways, right? Fees and interest, right? So every time somebody comes into the bank, let's say they're going to open up a checking account, they have $10,000, right? You dip it into a checking or savings account, you earn about 0.01%, right? So that's what they're giving you. Then they use that same exact money. Now Justin came in, now you want a loan. That same money is now going to be lent to you. How much are you paying of interest? You're probably paying like 15, 20%. The difference of how much you're paying of interest and how much they're giving out to everybody else on their savings account is their profit. So that's what they're making, right? Plus overdraft fees, every type of fee that you could think of that the bank has, like monthly fees, overdraft fees.
I just seen something yesterday where, what bank is it? Wells Fargo. Wells Fargo just got in trouble for.
Oh, so now we're calling people out?
I mean, I didn't mean to say Wells Fargo, but I didn't mean to say it, but I was just reading the article, and it just so happened that Wells Fargo, you know, they were saying something as far as, you know, pushy sales tactics where, you know, the bankers in there were, I guess, you know, doing the wrong thing, and, you know, they have to pay out somewhere in the billions of dollars to some of their clients. So I guess I apologize for all those extra overdraft fees that you got.
I'm actually not that surprised. And that's basically because banks were lending to students. So they also were part of the student loan terror that was going on between Bank of America and all these other banks. Then Sally Mae took control. It's just a lot of different things. But I feel like there has to be something done with the debt that is accruing for every single human being, especially when it comes to student loans. Like I just saw, we're in upwards of $2 trillion or something dollars. You know, it's just really hard.
Yes.
And you made a good point that, you know, if you're in the 200,000 and you get a job that's probably only going to pay you like 40, 50 a year, you're not even tapping into what you actually owe from the debt.
So you got to remember, you're making 40, 50. That's not what you're taking home.
Right.
So you're
minus
probably
your
taking
expenses.
Minus your expenses. So let's just say you lived at home with mom and pop, and you know they awarded you the luxury to say, you know what, hey, pay off your student loan. You're in a situation where even what you're taking home is still not even enough to pay all that off. That'll take you about 10 years. If you're making about 50,000, you're gonna take home around 20 something.
Right.
So
it's crazy. It's crazy.
Yeah.
But the banks, they're a lending institution.
Right.
That's what they are.
Right.
They lend money.
Right. A lot of people think, you know, the banks aren't what they used to be. You know, just doing, you know, I'm 28, so I didn't get to experience what the banks were back in the day where you could walk in and get an account for 10%, 15%, and those numbers were off the chain. Now you walk into certain banks and you're seeing, you know, their best accounts in the bank are, you know, a little over 2%. You know, that's under under inflation. You know, if people don't know, when you walk into a bank, you know, what are you looking for? You're gonna get a CD, account for, you know, living expenses. Inflation calls for 3.5%, almost 4% every year. So you want to make sure that your money's making just as much to at least break even with your dollar.
Right.
Even though your money is making money at 2%, when you go pull it out in 3 to 5 years, right? What CD account lasts for how long?
It depends. They have different terms. So there's some that's a couple of months, like 5 months, 3 months, a year. It goes up to 5 years. But you could earn interest on those type of accounts, but you need to pay taxes at the end of the year because you get a form.
So I'm paying taxes on an account, right? I have to pay taxes on this account, right? And then my money's not even making enough money for me to be satisfied with leaving that money there in the first place.
Right.
Correct.
Right. But, you know, it's funny sometimes. I go into the bank and I'm just waiting there. And, you know, I hear some of these older people going there, deposit lots of money into these CDs. And I just feel like, you know, they just don't know. Or two, they just become very friendly with the tellers now.
Probably.
You know, and it's just one of those, and I guess I wouldn't say end of living things, but one of those cycles of life where you're accustomed to, you know, the person who bags your groceries and, you know, you guys become real friendly. And
Well, remember, CDs back in the day, they used to give 5, 6, 7%. So back in the day, CDs was a popular thing. That's why you see a lot of elderly people go into the bank now, and they already fell into that norm, and they still do it because they believe that's the best product out there right now.
Scary.
It's kind of like go for what you know or what you're used to, you know.
Well, again, like Stephanie said, this is why we're out here campaigning and, I'm not saying at the end of the day don't get a CD. If that's what your financial situation could cost you, do so. And at the same time, you kind of want to diversify your portfolio.
Right.
Correct.
So, go out there, do it, but make sure that you're doing your homework on those different type of accounts.
Yeah.
And be studious. Don't just, say Make sure that you educate. Go ask people, right? Look for some financial educators out there that aren't charging you for your time. Sometimes you're going to sit with somebody and they're going to charge you, $200 for the hour,
Right.
and then make
True.
money on top of the transactions that they provide you. So it's like they're double whamming you,
Right.
And for me personally, when I decided to join the campaign, it was just, if I'm gonna teach people about their personal finance that I know that they don't know, then I can't charge them on something that I know they need help with.
Right.
And I think that's the main difference, and I think that's why we do what we do, just understanding that the difference between who we are and what the old industry used to be was just simply those things.
Well, what's the common goal to talk more about finances? Like, what is the common goal? What's the mission?
Definitely to move people from financial insecurity to financial independence. That's our main goal.
Okay.
I think we spoke about this the first two times we came on here, was just basically, parents have to take control of what their children are educating themselves on.
Right.
You could teach your child, the ABCs and the school stuff, but then when they get to a age of really understanding, finances has to be something that's being taught. The schools aren't teaching the kids in our community what finances are supposed to be, right? So then our kids, they grow up not having the importance of understanding or the proper relationships with money. And then, for them, it's like, you hear it all the time, money's the root of all evil, but it's really not, right? Money's what provides, food on the table, the roof over your head, right? You got people like LeBron James who are opening schools. He just announced that 200 kids he's paying their full ride to college, right? So it's not the money itself, it's the person, it's the action, right? If you don't have the know-hows what to do with the money, then those things could definitely hurt you, because now you're teaching your child, well, not teaching them, or inadvertently teaching them, because they're just watching the same relationship that you have with money. And I think I said it the first time I came up here. My parents never spoke about money in the house, but I knew it was bad when they started arguing. So at that point in the game, it was like, listen, I know for myself, when it comes to teaching the next generation, they're going to know the different type of accounts when they go in there. I know certain schools are teaching credit. They have credit programs for the students already that are going on. But it's just so much more to the finance game that I think we have to start attacking when it comes to the young generation.
It's like a generational gift and a curse at the same time, because depending on where you live, your zip code, you might get a more, I guess, overview of financial literacy. Like, what is financial literacy? What is debt? What is credit? What's good credit versus bad credit? Just certain things that you may get in school, some things you may get from your parents, and some things you may not. I know for me growing up, I never had financial conversations either. We never even talked about planning for death. Like, it's like these are things that are really happening, but no one is really talking about it. And it's just, wow, it's mind-blowing that I'm 36 years old now, and now we're just having these real deep conversations about finances. Everyone is so afraid. It's like, you don't want to talk about death, and you don't want to talk about money. Like,
it's crazy, because I can remember I was 17 years old. I was in my aunt's house, and I got the phone call that my brother was murdered, right? And I know at that particular time it was extremely hard for the entire family, but luckily we got a discount for two reasons. One, my aunt worked for the DOE, right? And my father at that time worked in the cemetery. So they gave us, for him being in the cemetery, he got a discount as far as the funeral planning and, the funeral service, the plot, and the burial, everything. But to think now that if he didn't have those discounts, there was no way the family was going to be able to pay for that, because it was so, it was so left field.
Right.
It was unplanned, right? And to think about every day that those happens to young kids, right? And here's the thing, even when we're talking about funeral planning or, understanding debts, right? Everything could tie into a debt. If you don't pay it, it becomes a debt now, right? So even with something as far as, planning for funerals and things like that. Listen, if the funeral service happens and you don't pay it, you owe that funeral service now, $15,000, $20,000, $10,000, depending on how you wanted to design it. But these are things that, our everyday lives need to be planned out financially as well. And not saying go out there and be robotic, but understand that, hey, if I drive a car, at least make sure that if a tire pops, I have enough money to fix the tire.
Right.
If I get into an accident, I have enough money in the account to pay the insurance cost, to pay the difference of those things. If somebody busts your window, you have enough money to cover those things, right? And these are things that a lot of people on a day-to-day basis, they just don't account for. They just think, I own this thing and then it's mine and it's untouchable.
Right.
You can't account for, if I go outside now, maybe a truck sideswipe my mirror. Right? And these are the things that you're going to have to start accounting for.
Yeah.
So even on a bigger scale, something like planning for a funeral is it's very extreme. How you want your flowers, the music, how many days you want the service to be.
Jeez.
I went to and it's the crazy part. I went to a funeral a few months ago where a fight nearly broke out because people, listen, you owe me this amount of money.
Wow.
But these are things that we could all take care of and we could all plan for.
Right.
If, we all just sat down for, maybe an hour and just really thought about our lives and what happens if I prematurely go, how am I going to pay for that debt if you're no longer here? Right. What happens if you don't pay that debt? What happens to the kids? Right. These are things, conversations that a lot of people should have that they just, don't have.
How do we attend this financial literacy campaign or session?
So our office is expanding. It is growing.
Nice.
So at the moment, we have 3 days that are accessible to the community. We have Tuesdays, Wednesdays, and Saturdays. So Tuesdays between the hours of 7 p.m. and 9 p.m., right? Wednesdays, 7 p.m. to 9 p.m., and Saturdays, 10 a.m. to 12 p.m.
Is it all in the Bronx?
All in the Bronx.
Okay.
So the address is 3030 Middletown Road, Bronx, New York, 10461, Suite 109.
And that's for each one of them?
Yes.
Okay.
Each one of them. You can ask for myself, Justin Ampere. You can ask for Miss Stephanie Reyes here. There's more than 50 educators there willing to help the community. We're in 5 boroughs. The campaign is in all 50 states, provinces of Canada, Vietnam.
Correct.
In Vietnam. So we're definitely expanding the territory to make sure that everybody has this type of information.
Yeah.
Just imagine if you go to sit down with somebody and they're just pushing one financial vehicle or account in your face. That might not be financially fit for you.
Right.
Where you could go sit down with somebody who has many different options that could, financially cater to your specific needs.
Yeah.
I think that's the beauty in what we do. We're not owned by, Transamerica is our parent company, but we work with over 200 different financial companies. So when we sit down with somebody, when we tailor their financial needs, it's very different than the last person we sat down with.
What if someone wants to join the campaign and just, I don't know, learn more and then give out information just like you guys are doing?
I didn't bring no material with me today, but it's very simple. A small fee of $100 just runs your background check just to make sure that, you don't have...
You're not a crazy person.
Right. Like most fields now, they want to run a background to just make sure that you fit the description of the title that you're going to be. So specifically in the financial field, they just want to make sure that, you don't have no incriminating background when it comes to money, right? No money laundering, no identity scams, no frauds, right? Because you're going to be, sometimes you might sit down with a client who wants to, have $250,000, and they want to make sure that that client's money is going to the right place.
Right. And ideally, when you invest your money into something, you're actually going to do it. So that's another major reason why the $100 is put in place for, just having that discipline, that commitment to be engaged, to be, if you want to join in and get affiliated with the firm, you're also going to educate yourself, you're going to educate others.
Interesting.
I say this all the time. I just wish at certain points, I was introduced to this campaign when I was in high school, a lot earlier. Just maybe, maybe my financial situation wouldn't have taken a longer journey.
Right.
But, you learn. These are the things that you
Right.
have to learn along the
Right.
way. And we're just here to, just enlighten and lighten the load
Yeah.
as far as, helping you out and helping your family out.
Like, I know it's never too late to learn things, but it's like, are you applying this information to your actual life?
Right. Right.
And I know we talked about that, like, applied knowledge is everything. And, we're giving the information and it's free. You just have to subscribe. But in actuality, some people will listen and just be like, But how do you capture them to say, this is information that's important, that you can apply to your life, that you can apply and help someone else that's in your family and have them apply it to their life, and just, that general wealth mentality, basically. How do you capture?
And having that emotional connection. Definitely the emotional connection, because you could be interested in something, but if you have no emotional connection to it, you're just interested. That doesn't mean you're going to actually do it. There's no action behind it. So you need to have that emotional connection, that big why, as to why do you want that generational wealth, right? It's not so much about you, but it's about what's more important to you. It could be a family member. Half of the times, the majority of the times, is usually somebody else that's your motivation,
Right.
rather than yourself.
Right.
Right? Like in my example is my nephew, right? Somebody else's example may be their mom, their dad, their sister, or maybe even somebody that passed away, right? Like, I'm going to do it for this person, So it's just having that emotional connection where it's not just so much financial education, but it's more, I want to do this for this person. That's my big why,
Yeah.
When you think about New York, New York is like a very selfish state, right? Like, people don't hold the door for you sometimes, or they get mad, or they don't say thank you.
They don't say hello.
Right? They don't say hello.
Good morning.
And it's kind of like, New Yorkers is kind of like Zoom,
Yeah.
right? Like,
Yeah.
they just live so fast paced all the time.
It's the hustle and bustle mentality.
Right, and it's kind of like, hey, listen, if you could slow down for 5 minutes and just help educate one person, you could make the difference in your community. And for me, it's kind of like, I want to know that if I look back in 30 years, that I can know that the Bronx, going from one of the most poorest congressional districts in all of the U.S. to now being up and coming, right? And we don't have to worry about us being moved out of our neighborhoods because of gentrification, but now because we could literally own the corner stores and own the housing and the buildings in the neighborhood. I think that's very important for me on why I do what I do.
Right.
It's not about myself and and the self gratification that I bring, but I know that if I help other people, I know what that could do for them. I don't have children, but the people who do have children, who do live in those buildings, right, who are struggling because they don't have financial discipline, right, who don't have access to the information, who don't have a way out. This is the reason why I do what I do, and I love doing what I do, just simply because on an everyday basis, you don't know who's willing to receive the information, right? Somebody could be cursing up a storm, right? They could be cursing somebody out because they bumped into them,
Right.
and then all of a sudden you could say, you know what, ma'am, hey, how you doing? Sorry that happened to you, and then all of a sudden you just change their whole perspective on how they
Right.
receive life,
Right.
and it just if you just have the ability to just reach out to one person, I think that makes all of the difference.
Yeah.
And just to go back to it, if New Yorkers could just slow down and have a little bit of that Southern mentality, oh man, I think this would be a completely different place.
Right. Well, I have some Southern roots, so I mean those are valid points. Like, we have to slow down. We have to get the information, absorb it, and then be able to put it out there into the universe. So even with this podcast, if one person is listening, that might be that one person that life has changed drastically, for a great financial reason, just for having you guys here. And then also, just maybe putting best practices in place. Like, let me figure out how I can get my budget sheet. For a budget sheet or a budget plan, do you have a specific one, or do you just have your own personal one? Or is it something that you guys share while you're doing the campaigning?
So I have one personal for me because it changes every month or so. I may have a different idea, like, hey, let me add this or let me make this better. So I do have one for me personal, but we also have one through the campaign. It's a personal financial strategy where we sit down one-on-one and we go over people's expenses, what are their goals, and how can we move them from point A to point B.
So it's like a whole, like, what would be my experience if I come there? What would be the first thing that happens besides knowing my name?
So the first time, so if you're going to come, if you come on a workshop day, you're going to definitely learn, who we are, what we do, how we go out and help the community. If you come on a Saturday, which is more of the workshop, you're going to learn a specified topic, whether that be debt management, financial planning, retirement. So you're going to be able to actually see and be aware of, what you're missing, what you need going on. Then we'll set up a follow-up date, whether it be right there on the spot, go to your home, you come to the office. And now we start goal setting for yourself, right? What do your financial goals look like? What do you want those financial goals to be, right? Then from that point, now we start assessing your monthly expenses, right? And here's the sad statistic. I think it's about like 65% of people have never even sat down with a financial professional before to even go over their finances. So
do you know why that is?
I don't know why, but even for myself, the first time I sat down with a financial professional, I was about 3-4 years ago, and at that point, I was making good money. I was making close to $100,000 at that point. But even for myself, I was very skeptical. Like I didn't want somebody into knowing
your business,
right?
basically.
I think for most people, there's that outer shell of what they want the world to perceive them to be, and then the finances dictate a whole different story of really who you are.
But that could also be that's what you learned at your home, right? Your parents are not having the conversation. So when somebody's having the conversation with you, you're like, wait, this is new. Why should I be giving you, why should I sit down with you?
Or you have that mind your business mentality.
Right.
But I'm thinking, like, we're told, I guess, on a yearly basis to pull your credit report or your credit history. Like Credit Karma is free. And then you would outline what is actually on your credit report. Right. And then I would assume you're making money. So you go to a financial aid person. I mean, not a financial aid person, but you go to a financial advisor to say, how can I improve my credit? How can I stop spending this?
It could also be,
I don't know.
Right. It could also be some financial advisors are charging, as he mentioned, and some people don't have the funds for it. Or maybe just some financial advisors, as I mentioned, they're in the bank. And to sit down with one of them, you need to have a certain amount of money.
And here's the scary reality.
You're like, I have $5. Can you help me?
And it's crazy because even when you think about what's advertised on TV, finances is like a horror movie. It's like it's like turning your lights off in the dark and counting to 3 and Freddy Krueger's coming. So it's like anytime you watch TV and it comes to finances, always somebody in a scam or a Ponzi scheme or somebody on Wall Street took $1 million from here. And so it's kind of like I'm not going to sit down with a financial advisor knowing that they have that kind of capability and access to my funds.
But do you guys see the Credit Karma commercials where they're like showing someone, like this one recently. So it was a couple, and I guess their kids were running around the house, and the guy says, if we had better credit, we would have a bigger house. Yeah. So the lady's like, oh, well, maybe you should check Credit Karma. And then he checks it, and I guess his score was like 700. And so he's like, oh, yeah, we can get a bigger house now. But I've seen that throughout the, past couple of months where people are actually refocusing on credit scores. But it was like a not conversation. Like no one was talking about credit scores back then. So now it's like a FICO and then a credit score.
Mm-hmm. Maybe also because they like, I want to purchase a house. Oh, what do I need? You need credit. So that's why a little more people are like, okay, I need credit. That's why they're refocusing on the credit because of the end result.
Yeah.
Definitely as far as like the millennial age right now, a lot of millennials are trying to transition into that, that home ownership aspect where, for majority of their time, still living at home with mom and pop and, they didn't have to worry about those expenses. Now you're in a realm where, I kind of need history at this point so that the bank knows who I am, what I'm capable of doing. You know, I've built that history, that relationship with them. So I think that's definitely. I even think I was explaining this to my sister yesterday. You know, go get yourself a secure card, something small, where it's limited. You're not overspending on it. If you max it out, all right, it's over with, right? You're not gonna
Wow,
be.
they still have those?
Yes. You could get yourself
At
a
Citibank?
Citibank have. I know Citibank, Chase, Capital One.
Oh,
Yeah.
okay.
So
Okay.
there's some really good. There's some online accounts that you could get the secure card with, or right, find a responsible person. And I was not allowing her to use me, right? Where you know you could get on their credit report,
Yeah.
right? Where now even though they're making their payments, you're just an authorized user, but you don't
Right.
have access to a card,
Right.
so that
Actually a
you're
great
building.
idea.
You're just building
Right.
the history at this point. And I just the only reason why I wanted her to do that is because now she's of the age where she's using the card. So I want you to use the card to build the credit rather than you know you just that is something that if I would have knew better I would have did it when she was very young.
Right.
You know, but now that you're of age, hey, listen, I want to walk you through the process of you know being responsible with it, because I think what happens too is that you do the authorized user and then you're granting somebody who's never had to manage money the ability to walk into a bank now and possess you know a $5,000 limit the
Right.
first time,
Right.
you know, and then I would kind of get scary because they just like, oh, this isn't my money, but they're not knowing, you know, the after effects of it, and they're just swiping left and right.
Hey, swiper, no swiping.
Right.
Yeah, but you could actually add her to your credit, and she doesn't have access to use the credit.
Right, right.
So just don't order a card. And
See, I kind of like that idea.
That's actually what
my
I did.
mom did
Mhm.
it the opposite way. She's like,
Okay.
I'm gonna make you authorized user, and you're gonna spend, and you're gonna pay back. But it's like,
that
do
was
you
just so
trust
you
me?
discipline.
Do you trust me?
Yeah.
No.
It's funny because I know my uncle tried that, and somehow his daughter got a hold of the card, and yes, it's not pretty.
I mean, that's how actually I build my credit. My dad put me on his credit. I did have a card, but being that I've been in the business industry for a long time, I didn't use the card. But there is an option to just not order the card. And there's no way for the authorized user to call and say, hey, can you order a card?
I like
Because
that
you need to be the
idea.
primary user.
I like that idea.
So
I might actually do that
that's
for my
actually
kids.
a good.
But time is upon us. So I wanted to let everyone know that there's a great book called The Nickels, Dimes, and Dollars. It's a wise kid's guide to money matters. So it's kind of basically what we're talking about right now. It's a fun way for kids to learn how to save and invest and all that other stuff. If you would like to take a quick look, but we do have this book that we're selling, and percentage goes back into our charity book fairies. If you guys would like to know more, just go to kidlightenment.us. You can always follow me on Instagram at NikkiMarie_radio. Thank you to today's guests. Just to close it out, let's reintroduce yourselves and how people can contact you.
Sure. Again, my name is Stephanie Reyes. You could contact me through the Bronx office, Bronx Financial Office at 3030 Middletown Road, Bronx, New York 10461, Suite 109. Or you could also actually use my phone number. I use my phone number for my business. So it's 347-754-9233.
Excellent. And you could catch me, Justin Pierre, also at the Bronx Financial Center, or you can email me at capital JUMPIERRE12, the number 12 at yahoo.com.
Awesome.
And really quick, I'm going through this book here, and there are some really good tips in here for the kids that I forgot to mention myself. So I would suggest
Really
definitely
good.
getting this book. Yes.
Well, that's why we always have the next show, and our next show is also going to be with Justin. Just really quick, the next one is going to be on what topic?
Building your financial home, financial foundation, right? So exactly what should go into your financial portfolio when you're creating your financial situation for yourself, your family, and your future.
Awesome. Thank you guys so much for tuning in. Make sure you subscribe to this great podcast, Leadership and Readership Hour. Again, I am your host, Nikki Marie. Thank you and have a wonderful day.
Thank you.
Thank you.
Thank you, guys.
Thank you for having me.
In there.
Yeah.
I feel like there's music on.
Thank you for having us.
Oh, this
It was
is
a pleasure.
really good.
Yeah, I kept eyeing it when it was sitting over there. I was like, this is good.
And this is what you guys already have into schools already, right?